Hello everyone, my name is Samta and welcome to Kalkine's Value Talk Show. Today's live session is on the theme Spotlight on Dividend Supercycle. Well guys, we have been witnessing sensorial market trends amid rising bond yields and inflation expectations. Structuring European vaccination program is another major growing concern. However, we may see some easing of market pressure as the improvement in the Fed's economic outlook indicated in the March meet did not immediately change policymakers' expectations for interest rates. Now, looking at the emerging themes from the investment standpoint, potential dividend supercycle is an interesting space to tap. We saw a better than expected earnings seasons in February, during which several ASX-listed companies released their financial results and operational milestones, surpassing the expectations of the market players, analysts, and brokers. We also saw rebound in dividends layout as well as back of improving operational and financial footing of the businesses. Now, the game is all about choosing the dividend star smartly to beef your portfolio up. So to discuss the same, we have with us Ms. 𝐊𝐴𝐚𝐥𝐤𝐢𝐧𝐞. She is the Director of Research from Kalkine Group. And 𝐊𝐴𝐚𝐥𝐤𝐢𝐧𝐞, please share some of your insights with us and our viewers today.
Thank you, Sam, and hello to the wonderful audience. I think it's been a month that we have wrapped up the exciting reporting season for the Australian equities, and why is this period being closely eyed? That's the question here. So undoubtedly, stock prices of the companies take a swing whenever you have the earnings, reporting season coming in. Before and after any release by the company, that makes a crucial period for investors to watch out for. Meanwhile, equity analysts also predict earnings estimates through their analysis and whatever is coming as, from the companies. Now, these things result in stock price movements due to the speculations. Now, besides stock prices even move after the earnings results are declared, up or down, depending on how the results have turned out to be. What are the growth factors which the company is looking at, from future standpoint? And these reports really satisfy the market demand for information. So if I'm an investor and I'm looking at what stocks I should be, punting onto, I would definitely look at what is expected from the earnings releases and how these actually pan out for the investors. So this season of performance announcement was really very, very interesting. Why I say so? Because we have seen how, COVID pandemic impacted everyone and how businesses were changing their course of action given the scenario we were in. And we have really seen some exciting results despite all these, crisis-driven situations during this February. Now, market players who betted on such companies, they have been able to make some considerable gains. And that is where, the pitch comes in, that what is the momentum that you're expecting from the market when you look at these releases. So, in today's session, Samta, of course, we are highlighting or spending time on dividend supercycle, and I would be sharing some interesting insights revolving around certain companies that released interesting dividend payouts. Even after a month, investors are having a look at these stocks where they did not expect things to happen on a positive side given this overall scheme of things. But yes, I think investors are looking at different opportunities. Over to you, Samta.
Before we start, I want to put a disclaimer that any advice in this video is general in nature and it does not take into consideration your personal objectives, financial situation, or needs. So moving on, 𝐊𝐴𝐚𝐥𝐤𝐢𝐧𝐞, what is your take on the performance of this year's February's earnings season?
Samta, most importantly, we saw that the Australian dividend payout, they exceeded analyst expectations, and this was seen across different sectors: economic reopening, fiscal and monetary support, online trends, then, demand spurt. These were some of the driving factors that we have seen over a period of time. Operating conditions improved across many sectors, and we saw companies' board of directors reinstating more generous payout ratios. And that's a great deal because investors are always sitting sitting on the edge to look out how the board of directors are going to pan out, the payout ratios. Now, some companies also issued special dividends, which was like, cherry on top of the cake. So that was really exciting for the shareholders and investors in general. We all know that Australia is known for being a traditionally high dividend yielding market, but because of the pandemic's impact on the company's performances, many of them had to aggressively cut dividend payouts. And we have seen that over time. So banks, utility players, and real estate companies, these were the hotspots or are the hotspots of income players, as we know. These were off the lens of market players. And, there were suspensions or slashings of payout ratios. We have seen that. Now, companies that had a robust history of paying dividends, withheld payments to preserve cash, and that helped in a way. However, if you look at the vaccine-related news, that also kind of, drives the market to an extent. So with vaccine hopes, emerging green shoots on economic front, there were a lot of expectations for a rebound among the heaviest weighted sectors on the benchmark this year. So the Australian share market has finally wrapped up the half-yearly performance evaluation, and it's reporting that staged an impressive show with better than expected corporate results. That was the key highlight in the Feb season, the Feb month. Now, it marked its closure with solid H1 FY21 results from players like Reece, Coventry Group, BWX, so you name it, even big companies, then small and the mid-cap ones, they were able to churn out good results. Now, market really cheered some of the encouraging, earnings updates from BHP, Brambles, NAB, Coles, that drove the market scenario during the season. And interestingly, the earnings results seem to have placed the ASX in a good stead for a full year earnings recovery in FY21 that looked highly dubious a few months ago. So that's how it has been sometimes. So it was not expected, but it has turned out to be well, so to say.
So Hina, if we talk about, what is your take on this much talked about dividend super cycle?
So Sam, it's a hot topic. Looking at the trends now, investors are gearing up to look for opportunities in the dividend space, and the rebound in earnings and dividends exceeding the initial optimistic forecast of market analysts, that these things are really helping the investors to take a call whether to go in for a stock or not. And especially income investors who keep on looking at the dividends, they are really happy with what has happened over a period of time and reflected in the earnings season. Now, experts believe in an Australian dividend super cycle is in the offing, and that we all can understand. Sectors like banks, miners, which comprise the bulk of the S&P ASX 200 index, are important drivers of the season's dividend super cycle. Interestingly, if you look at, experts like JP Morgan and all, they have declared a super dividend 7 kind of a charter, which includes Fortescue Metals, Charter Hall Group, Rio Tinto, Super Retail, BHP, ANZ, and NAB. So these are big names, and we're talking about dividends. So of course, we have to look at these kind of players. This is a very positive sign overall, as we are still in the middle of the pandemic, and even though the vaccines have been rolled out, but the pandemic is still far from over. And this is not, investors were probably expecting the seasons to be likely, and the way dividends have been pan out, it has really helped give a positive spin to the sentiment. Now, overall market performance shows that corporate Australia is in a good shape, or at least what it was, a way better than what was expected. And companies are maintaining strong balance sheets. So that's a plus point. Economy is also recovering faster than expected. So smart moves, income seekers, they're cherry picking dividend stars. That's the key thing here, what we're talking about today, Samta.
Certainly, Hina, and if we talk about some of the success stories, so if you could just share some success stories in terms of handsome payouts that income-seeking investors would take note of.
So certainly, Samta, like we have seen good stocks, good things coming in the resource sector. If I talk about Rio Tinto, that's the Australian miner, we know about this name. Now that unveiled the biggest dividend in its 148 years history of the dividend being around $9 billion. Now this represents a 72% payout ratio. Mining group Rio, they declared a final ordinary dividend of $5 billion, as well as a special dividend of $1.5 billion in recognition of its robust financial performance in 2020 financial year. Now, company will be paying the 2020 final dividend and the special dividend to shareholders on 15th of April 2021. So that's how, we are like 1 month away from that. The world's fourth largest iron ore miner, Fortescue Metals, if I have to talk about, they announced a fully franked bumper dividend of AUD 1.47 per share for H1 FY21. Interim dividend represented 80% payout of H1 FY21 net profit after tax, and this was like 93% higher than the FY20 interim dividend. So look at the steep increase that we see here. Now, if I talk about diversified natural resources group BHP, they have smashed the dividend record as well, announcing a dividend of USD $1.01 per share for the half year ended 31st December 2020. Now, the dividend was 55% higher than the prior corresponding period, and this equated to an 85% payout ratio on an underlying basis. Gold miner Newcrest Mining Limited also doubled the interim dividend, as their statutory profit climbed by 134% during the 6 months ended 31st December 2020. The company is determined to pay this fully franked dividend on 25th of March 2021, and notably, the gold price increase that translated into improved profitability for the company, enabling it to enhance the returns to shareholders. So you look at the resource sector, we have many names like this, I should say, who have been able to maintain or at least enhance the dividends this reporting season.
So Hina, if we talk about retail and property stocks amid favorable demand scenario witnessed by these industries, so what about them?
Well, Sam, in the retail segment, we have names like JB Hi-Fi. And if you look at this company, they announced a whopping 81.8% increase in its interim dividend for HY21. The company declared a fully franked interim dividend of 180 cents per share, representing 65% of the NPAT. So, net profit after tax. Then Super Retail Group also is there in the name, that owns and operates a portfolio of retail brands across Australia. They declared a fully franked interim dividend of 33 cents per share. Now, coming to the real estate sector, Samta, let's start with Charter Hall Social Infrastructure REIT. It's a real estate investment trust investing in high quality social infrastructure properties. They increased, the FY21 distribution guidance to 15.7 cents per unit. Then talking about Cromwell Property Group, which is a property and funds manager group, they declared a dividend of 3.75 cents per security. Besides fund and asset manager of large format retail centers, Aventus Group, they declared a dividend distribution of around 8.2 cents per security. Then coming to, investment trust Growth Point Properties, they estimated an FFO of around 25.2 to 25.5 cents per security, besides reaffirming the dividend distribution of 20 cents per security. There are many other players like Stockland and all. They also kind of increase the dividend distribution. So I'm not getting into the numbers, but yeah, that's how the landscape has been. There were certain decent dividend payouts in IT space too. If you talk about leading software solution provider Bravura Solutions, they offered unfranked interim dividend of 2.6 cents per share. The company brought the dividend payout ratio to 70% of its half-yearly net profit. Then we have another name, Appen, which is the technology player again. It declared a final dividend of 5.5 Australian cents per share, which was, a growth of 10% compared to the final dividend that they paid out in 2019.
So moving on to the next question, if you could just share some tips so that, our investors who are watching this show now can reap this potential dividend super cycle.
Samta, see, latest tech, route, which we have seen amid rising bond yield, warranties caution against growth-oriented IT space. But nothing remains sure that the, travel and tourism industry, how will, that pan out? They are still under pressure as international travel is still off the charts. But if you look at banks, energy, financials, the trends are looking stronger than what we had seen in the past over a period of time. I believe energy has a bright outlook, and that's why probably we are hearing commodity super cycle and energy, oil space taking some, steam or having some steam in it. It will be an interesting space, commodities and energy. Resources as a whole to keep an eye on. And crude oil prices we have seen lately, they have surged. Of course, right now they are fluctuating, but we have seen the demand increasing, investors taking interest in energy companies, resource companies. So these are, these are the sectors which investors can look at. Of course, due diligence has to be done when you're looking at specific stocks. Then miners can be evaluated. We have seen that players like FMG, they have given, or, they have been sitting at a dividend yield of around 12%, or Rio Tinto, they have been sitting at around 6%. So we have seen these, coming in. Given the promising trends in property space, select companies with robust financial and operational footing can also be evaluated by income seekers. Cromwell is one name that we have seen that they have, offered a dividend yield of 9%. Of course, these are not suggestions for you to punt on, but these are examples for you to look at that how these spaces have evolved over time and what are the kind of numbers we see on dividend yield side of things. So it looks like Australian banking space is also set to rebound in 2021. Investors can take a note of this, and they are emerging relatively well from the aftermath of the COVID-19 pandemic, I should say. The economy is also heading towards revival. So that's a positive sign. And I think these pockets will lay out different approaches when investors are looking for long-term potential with dividends at hand.
Thank you so much, Hina. And yes, like you said, let's just hope that the economy, we know that the economy is heading towards revival, and let's just hope for this to happen, for some positive outcomes to come. And thank you so much for providing your valuable insight on this year's earnings season, Hina.
Thanks, Amta, for having me here, and thanks for the lovely audience for listening to us. But yes, with dividend super cycle in mind, I think there'll be a lot of opportunities. We just have to sit tight and look at the market pulse. Yeah.
Well, that's all on Value Talk today. Join us on this exciting journey of live streaming network on financial and stock market news. Till then, keep watching Kalkine TV.